Hi, I'm Ninness, your loan pro from Denver, Colorado, with another installment of How Much Mortgage Can I Afford? Today we're going to be diving into closing costs to discuss what they are and why they're necessary in a loan. As always, if you enjoy the information, if you're a home buyer looking to educate yourself, make sure you like, subscribe, or follow me. That way you get this delivered to you every week. We love helping homeowners and want to make sure you get all the info you need. Otherwise, get ready for learning everything you can about closing costs and prepaids in this episode of How Much Mortgage Can I Afford? Well, thanks again for joining me on this episode, talking about closing costs and prepaids. Now, when we talk about a closing cost or prepaid for a mortgage, it's actually a catch-all phrase. Closing costs is consisting of two items. One is the actual closing costs that are required as part of getting the loan, closing on the real estate transaction, and then there's a second component which we call prepaids. Prepaids are actually for taxes, insurance, and prepaid interest on the loan. I'll talk about that towards the second half of this episode. Now, one thing I want to address real quick with everyone is that there is no closing cost loan. And what I mean by that is when you hear the phrase no closing costs, you're actually hearing someone say that the lender is paying those closing costs. Let me explain a little bit further. Federal law requires that every mortgage company disclose every fee in the loan, regardless of who's paying that fee. So if a seller were giving you seller concessions as part of your contract, or the lender were giving you a credit to pay them, certainly it may look on the surface that you have no closing costs, but the reality is there are closing costs. Everyone has to disclose those. So if a lender's paying your closing costs, how does that occur? Well, it's kind of like taking a cruise. You may go onto a cruise and it may be all-inclusive, and people will occasionally say, well, it's free. Well, it's not free. It's included into what you've already paid. In this case, most lenders offer no closing cost loans by marking up the interest rate. When you mark up an interest rate, it can give a credit to cover closing costs. So don't be fooled by just hearing, oh, it's a no-cost option. You actually could get worse terms to your loan by going with that option rather than bringing the funds yourself. Not always the case, but it is something important to look at. Now, closing costs are two main components. There's closing costs for a lender, typically looking at lender fees. This is the cost of getting your loan originated by a company, as well as things like an appraisal, if there's an HOA questionnaire as part of a condo, elements like that. Then you also have title fees. When you go and purchase a home, a title company will be involved as an independent third party to make sure the transaction is properly escrowed, meaning funds are transferred correctly. The second job of a title company is to make sure that they're recording all the information at the county correctly. You want to know that you have legally taken ownership of your property the right way. All the documents were recorded at the county in a legal way, and that you're a true owner of record. That is what closing costs are. In the title side there, you have a closing fee, you have title insurance to make sure that, again, the title is free and clear of encumbrances, meaning other loans or obligations or ownerships. And you also have recording fees of the cost of actually recording at the county level. So that's what we're going to put into the closing cost bucket. On the prepaid side, prepaids are prepaying items that you would have to pay otherwise. So the first thing is per diem interest. On the day you close, you have to understand that you are paying per diem interest to the end of the month. If you close in the middle of the month on the 15th, each day of the month remaining, you actually bring as interest to closing. The reason is mortgages are paid in arrears. So it takes a whole month for interest to accrue, and then when your payment comes, you pay actually the back interest. So you prepay the first month of interest to make the math work. The other element that comes into play is taxes and insurance. At closing, if you're escrowing your taxes and insurance, which is really a standard way here in Colorado, your insurance is actually paid in full for the first year. So that's 12 months of your monthly insurance payment paid in full. But then you also have an escrow account that consists of 2 or 3 months of taxes and insurance that we put into a savings account so that the following year, when those bills are due, the mortgage can assist you with making those payments. If we don't fill a couple buffer months room, we won't have enough when that rolls over. The reason being simply that when you close, you usually skip a month before your first payment is due on a mortgage, and we need to account for those months' funds. So closing costs are actually paying for the cost of the real estate transaction, the real estate closing, the mortgage transaction, getting the loan in place, and then putting in place your taxes and insurance so that you have enough funds. That is the catch-all of closing costs. The final thought I would encourage everyone to stay away from is the old adage of it's 3% of the loan amount. Back when I started in the mortgage business, it was common for us to say we need 3% for closing costs. On a $100,000 or $200,000 home, it was $3,000, $6,000, etc. That's really not the case anymore. In fact, I find most closing costs and prepayments to be in a range of $4,000 to $6,000 until you start getting up into homes priced over $500,000. That allows for variances for things like taxes and insurance, which certainly will be based off the price of the home. But rarely do you see the actual fees for title vary that much. Hopefully this gives you a much better idea of what closing costs are and prepaids and what we're referencing when we're talking about those. This would be in addition to your down payment, keep in mind. So if you want to have your down payment, you got to have enough for closing costs, or ask the seller to pay through concessions, or have the lender paid through yield, spread, or marking up the interest rate. In the end, we hope we're giving you all the information you need to know how to buy a home. If you have any questions, please reach out to myself or my team. We'd love the opportunity to assist you with your home purchase. Otherwise, again, like, subscribe, or follow, and we'll see you on another episode of How Much Mortgage Can I Afford?